I lead open banking at Mastercard, and that's in itself a privilege. But as Helen Trail, we've just since the last of these events announced the acquisition of a US business called Finicity. I'm sure we can go into a bit more detail on that if of interest later in the session. But I guess just as headlines for those who don't know Finicity, they're one of the leading aggregators in the US open banking market. And they also have particular strengths in taking that open banking data, categorizing it, analyzing it, and turning it into value. And they're particularly strong in serving the needs of the lending industry in the US. We're very excited about the acquisition, obviously. I will tell you it's been kind of interesting completing confirmatory due diligence purely through Zoom or equivalent through the lockdown period. That's a new one for all of us, I think. But yeah, pleased to announce it, and obviously we'll see where it goes. But yeah, big statement from us. I think if anyone had any doubt about Mastercard's enthusiasm for the topic of open banking, or indeed our global intent, then I suspect that deal kind of clarifies any questions one might have had. Roughly half of the US mortgage industry uses Finicity output to help with lending decisions. The sort of data they're using is, yep, absolutely information out of current accounts, but also information from a variety of other sources, both bank accounts, so not just checking accounts, but also savings accounts and other loan accounts. And they also take data from non-banking sources as well to kind of create that more holistic picture, which helps a lender make a decision. Now, we think that's really important, not least from a financial inclusion perspective, getting past all of the traditional issues with thin credit files and so on. But it also kind of, I think, highlights one of the difficulties in the UK. The regulation and the work of the OBE and so on has been very helpful to get us to this point, but it's a point, and we have to go beyond that. There is a clear commercial incentive to financial institutions to make available more data, in the sense that they are, when it comes to things like the lending use case, because kind of by definition retail banks are also lenders, but it's an indirect business case. Things like variable recurring payments. Absolutely, I think there's that I would strongly suggest there's commercial opportunity for FIs in that space, and I think we have to kind of move past the waiting to see what happens from the regulator next. I mean, I'm a strong supporter of the move to open finance and so on. There's nothing stopping institutions making available more data through the same APIs or expanding their current sets of APIs right now. It doesn't have to wait to be kind of told what to do by whether it's FCA or PSD3 or whatever else. So I think there's lots going on. There's lots of opportunity. I think the UK has certainly been has certainly shown the way, and certainly as far as Europe is concerned. And there's a lot of catch up still to do. We all know that payments is only just getting going, and there's a lot more that needs to be done, here and elsewhere. For example, so we're at the start of a very long journey. I think an exciting one, obviously. But and I think it kind of needs leadership from particularly from some of the larger institutions and so on, because one's going to have to make some decisions which don't have necessarily the most obvious and immediate return to move the thing forward. Otherwise, regulators will come along and tell you what to do, and I don't think that's in anyone's interest, because of not least the sort of time cycle for regulation to get created. We're building a thing called Resolve, which is kind of essentially a dispute resolution arbitration type service. We're just about to start recruitment for a pilot of that here in the UK. So if anyone on the line, bank, TPP, acquirer, etc., would be interested in participating in that non-commercial pilot, really just to kind of see how things play out. Large or small organisations perhaps taking a bit of risk to help move the things forward. Very happy to kind of talk about that and get you involved in that. One of the attractions of Finicity is that the co-founders, actually Nick and Steve, there have been at the heart of the creation of an organization called FTX in the US, Financial Data Exchange. That's absolutely a standardization play over there. You wouldn't be surprised to hear that Mastercard thinks that standardization is a good thing. The car, in fact, there was an internal meeting yesterday, and the analogy somebody used was, one of the problems with open banking is there isn't ISO 8583. Everyone's doing their own thing. One of the things that's made cards work so well globally is standardization. We clearly have the same view. It's how do you get there is the interesting thing. FTX in the US could be a path in North America, but kind of a bit like was said earlier. The early days of the internet and so on, there were various competing things out there, and kind of nature took its course, and now we all have something which works. I think kind of all one can really do is not make the problem worse by inventing new things. Rather see what's there, take it, leverage it, try not to, kind of create new proprietary things on top if one possibly can. And I think, that can be hard sometimes, because standardization can also mean limitations when you're trying to build a commercial business. But I think that just requires a degree of, maturity, I suppose, and of understanding the kind of natural pace of evolution of some of these things. But yeah, to be clear, we like standardization.